today we're diving into the exciting world where money never sleeps. Ever wondered where money actually moves when people say the market is up? Well, welcome to Chapter 7 Financial Markets. Get ready because we're about to uncover 10 key facts that explain how financial markets work and why they're important to our economy. First fact, financial markets are places where savers and borrowers meet. They allow money to flow from people who have funds to those who need them, helping businesses and governments grow. Second fact, without financial markets, our economy would be like a car without fuel. Nothing moves. They make sure money flows smoothly, helping ideas, projects, and companies take off. Third fact, there are two main types of market. The primary market where securities are sold for the first time, and secondary market where existing securities are traded between investors. Fourth fact, financial markets do a lot. They raise capital, set prices, manage risk, and even help find the true value of assets. It is like the brain of the economy, smart, busy, and always thinking. Fifth fact, in debt markets, companies borrow money and pay it back later, like taking a loan. While in equity markets, they sell shares, meaning you become a part owner. Cool, right? You could actually own a piece of your favorite brand. Sixth fact, we have public markets and corporate markets. Public markets help governments build schools, roads, and hospitals, while corporate markets fuel companies' dreams and growth. Seventh fact, stock exchange. Stock exchange is where buying and selling officially happen. Here in the Philippines, it is a PSE or Philippine Stock Exchange. Eighth fact, companies must list their securities on the exchange to be traded publicly. This ensures transparency and investors' confidence. Ninth fact, today's markets evolve faster than ever. Thanks to technology, globalization, and even digital apps that let you trade from your phone. The future finance, it is already here. And finally, the 10th fact, financial markets are the lifeblood of a nation's economy. Without them, businesses couldn't grow and investors couldn't earn. That is why understanding them is the key to our financial future. So, that is Chapter 7 in a nutshell. Financial markets aren't just about numbers. They're about dreams, growth, and opportunity. Because when money moves wisely, the world moves forward. This is Hazel Ango reporting live from the world of finance, reminding you not just to invest in money, but in knowledge.
Hey guys, it's your girl Rana and today we're diving into Chapter 8, Money Markets and Capital Markets. Don't scroll away. This topic might sound fancy but I'll break it down in 10 easy interesting facts. Fact number 1. The money market is where short-term borrowing and lending happen. It's like the financial world's version of utang and bayad agad, usually less than a year. Fact number 2. Its main goal, liquidity. That means making sure businesses and banks always have quick cash when they need it. Fact number 3. The money market deals with things like treasury bills, commercial papers, and repos. Low risk, short term, fast money, perfect for quick financial moves. Fact number 4. Now for the capital market. This one's for the long game. It's where companies and governments raise big money for projects through stocks and bonds. Fact number 5. There are two markets here, the primary market where new securities are sold, and the secondary market where investors buy and sell existing ones. It's like first release versus resale. Fact number 6. Bonds are like formal promises to pay back borrowed money with interest. They come in types like mortgage, bonds, debentures, and Eurobonds. Classic long-term deals. Fact number 7. Ordinary shares make you part owner of a company. You get voting rights and maybe dividends too. But remember, more risk, more reward. Fact number 8. Preferred shares are chill version of stocks. They give fixed dividends and get paid first if the company shuts down. Safe and steady wins the race. Fact number 9. Ever heard of AAA ratings? That's top tier. Agency like Modis and S&P grade how safe a band is from AAA to D. Fact number 10. Both money and capital markets keep our economy alive and kicking. They move money, fund dreams, and fuel growth, from small businesses to big-time governments. And that's a wrap. Short-term, money market. Long-term, capital market. Two sides of the same coin, both keeping the world of finance spinning. This is Rana, your reporter. Stay smart, stay curious, and keep hustling. Bye!
Every country has its own currency. The US has the dollar, Japan has the yen, the Europe has the euro, and here in the Philippines, we have peso. But when countries trade, travel, or invest across borders, they don't use the same money. So how do they exchange value? That's where the foreign exchange market, or Forex, comes in. It's the global system that keeps the world money moving. Let's break down 10 quick facts about foreign exchange market. Fact number 1, the market that never sleeps. The Forex market never sleeps. It runs 24 hours a day, 5 days a week, from Sydney to Tokyo to London and finally to New York. As one financial center closes, another opens. It's like a global relay race of money. Number 2, the largest market in the world. Forex is the biggest financial market on earth. Every single day, more than $7.5 trillion are traded. That's more than all global stock markets combined. Because of that massive scale, it's also one of the fastest and most liquid markets in existence. Number 3, currencies are traded in pairs. In Forex, you can just buy one currency alone. You always trade in pairs. Like the euro and US dollar, when you buy euros, you're selling dollars. When one currency goes up, the other goes down. This relationship is what keeps the market dynamic and balanced. Number 4, exchange rates change constantly. Exchange rates don't stand still. They change every second. Why? Because currency react to everything. Inflation, interest rates, politics, even global news. When one country's economy strengthens, its currency often appreciates. And when it weakens, it depreciates. Number 5, a market without walls. The Forex market doesn't have a physical building. It's what we call an over-the-counter market. A digital network where banks, investors, and businesses trade online 24/5. There's no trading floor. It all happens through computers and communication systems. Number 6, major currencies dominate. 7 currencies dominate global Forex trading. The US dollar, Euro, Japanese yen, British pound, Swiss franc, Canadian dollar, and Australian dollar. These are the world's most stable and trusted currencies. Number 7, central banks influence currency values. Central banks like the Bangko Sentral ng Pilipinas, the Federal Reserve, or the European Central Bank play a huge role in Forex. By raising or lower interest rates, they can make a currency stronger or weaker. That's why a single announcement from a bank can shake the global market. Number 8, high risk, high reward. Forex trading isn't for everyone. It's fast, unpredictable, and full of risk. Traders can make huge profits in seconds or loss just as fast. That's why professionals use strategies and discipline to manage risk. Number 9, 3 types of markets. Forex operates in 3 types of markets. The spot markets for immediate currency exchange, the forward markets for agreed future trades, and the future market where standardized contracts are traded. Each one helps manage currency risk. Lastly, number 10, Forex connects the world. Forex isn't just for traders. It powers global trade, from tourists exchange cash, to companies paying imports, to governments managing national reserves. Forex keeps the world connected. Without it, international business would stop. So next time you see exchange rates changing, that's the world's money in motion. That's the foreign exchange market.
So, this is the 10 facts about the mortgage markets and derivatives. First, discount points are prepaid interest payments made at the beginning of a loan to reduce future interest rates. So, the second is the mortgage markets and derivatives explains the nature and function of mortgage markets. Third is it discusses forward contracts, call and put options as examples of derivatives. Next is derivatives help manage price risk in investments. The next is over 70% of derivatives are interest rate swaps. There are many types of mortgage loans including fixed rate, adjustable rate, graduated payment, and reverse annuity mortgages. Private mortgage insurance or PMI protects lenders if borrowers default on loans with less than a 20% down payment. Next is derivatives are financial instruments whose value is derived from changes in an underlying asset like interest rates or currencies. Interest rate swaps allow exchange of fixed and floating interest payments. And the next is options give holders the right but not obligation to buy or sell assets at a set price.
Hey everyone, today I will show you 10 important facts about Chapter 11, Internalization of Financial Markets. Internalization means that financial markets around the world are more connected, meaning money and investments are easily more applicable. Second, this leads to global capital flow, meaning where investors can trade and invest internationally. Third, it is driven by technology, deregulation, globalization among the multinational corporations. Fourth, major global financial centers include New York, London, Tokyo, Hong Kong, and Singapore. Fifth, technology plays a vital role by making transactions and information exchange faster. Sixth, the process brings benefits such as economic growth, capital access, and investor diversification. 7. It strengthens the foreign exchange market, which supports global trade. 8. It also brings risk like crisis spillovers and exchange rate fluctuations. 9. Institutions like the IMF and World Bank help maintain global financial stability. And 10. Developing countries gain investment opportunities but face vulnerability to global shocks. That's all for Chapter 11. Peace out.